Okay, stop the presses because this is huge. Google, the parent company Alphabet, has just officially crossed a staggering $3 trillion valuation. Yes, trillion with a T. It's one of those numbers that, honestly, it's almost hard to properly comprehend.
It really is. Just mind-boggling scale.
Totally. I mean, to try and put it in perspective for you, it's like, well, you could probably buy every single coffee sold in America for a whole year, maybe more, and still have money left over.
Probably. Or think about GDPs.
Right. Google's market cap now, it comfortably blows past the entire GDP of countries like, say, the UK or India. And those are massive economies.
Exactly. It's not just a company doing well. Well, it's an almost unbelievable concentration of wealth and influence in one place. A truly historic moment in tech and finance.
Absolutely.
And when we talk about $3 trillion in market cap, which, for anyone listening, is basically the total market value of all the company's shares, what investors think the whole thing is worth. We're not just talking numbers on a screen. We're talking about an entity with economic clout that seriously rivals, major global powers.
Wow.
Yeah. And this valuation, it isn't just about how much money Google's making right now. It's really the market saying, we believe deeply in where this company is going. Its innovation, its ability to keep shaping, huge parts of our digital lives, our economy, even society, probably for decades.
That's a really powerful way to think about it. That scale just makes you think about economic power itself in the 21st century. So for you listening, the central question we really want to tackle today on the deep dive is, what does Google getting into this super exclusive club actually mean for investors like you and me? We're going to try and unpack the forces that push Google up this high and explore what it suggests for the future of tech, for competition, and crucially for your investment portfolio.
Exactly. That's the mission. We want to cut through the headlines, look at what's really driving this, and connect it all to that bigger picture of tech dominance and market shifts. The goal is to give you a clear understanding of why this milestone matters and how you might think about it for your own investing.
Okay, so let's dive right into the achievement itself. Google, parent Alphabet, tickers EGOEOG, hitting this for the first time ever, $3 trillion market cap. Like you said, not just a good quarter, this is historic. And what really gets me is that Google is only the fourth company ever to hit this level. That's incredibly rarefied air, isn't it?
It absolutely is. I mean, think about who else is in that club. You've got Apple, Microsoft, and Nvidia, each one of them. Giants that have completely reshaped how we live and work. Apple, built on hardware, the iPhone ecosystem.
Right, the hardware king.
And Microsoft, dominant in enterprise software. And of course, a huge player in cloud with Azure and Nvidia. Well, Nvidia is the newest member and maybe the most explosive recently. They've become the leader in the specialized chips powering this whole AI revolution.
Yeah, their rise has been incredible.
So Google now stands right there with them. It just underlines its massive role in search, ads, cloud, AI, across the board in the global economy. And it's worth noting specifically on Nvidia, their trajectory's been, even faster lately. They've already shot past $3 trillion, touching $4 trillion.
$4 trillion, wow.
Yeah, and that's mostly driven by the absolutely enormous demand for their AI chips. It kind of sets a new bar for just how fast things can grow right now and really hammers home the unbelievable impact AI is having.
That Nvidia jump to $4 trillion is almost dizzying, isn't it, in such a short time? It really shows the speed of capital flowing into certain tech areas right now, and the market's, fervent belief, I guess. But let's bring it back to Google. Beyond the massive number itself, what does it actually mean for a company to hit $3 trillion? Does it change their standing or ripple through the market somehow?
Well, connecting it to the bigger picture, it tells us a few really profound things. I think the key insight here is that we're seeing a kind of new economic reality taking shape. First, it obviously reflects just how digital almost everything has become and the, frankly, insatiable demand for tech-driven services.
Sure.
Second, it's a huge signal about investor sentiment. Like I said, the market isn't just valuing Google on today's profits. It's putting enormous stock in future growth, innovation, and those strong, defensible market positions they have in so many key areas.
So future bets baked in.
Absolutely. And third, and this might be the most critical point, it really highlights this trend of increasing market concentration. These few companies now hold immense power. They influence everything from supply chains to what you buy, even government policy to some extent. This isn't just about being market leaders anymore. It's like a handful of tech giants are operating almost like, nation-state economies. dictating trends, directing capital. It really does raise big questions about the balance of power globally and maybe what that means for innovation further down the line.
That's a really important point, that concentration of power, that economic gravity they have.
Yeah.
So, okay, the big question then becomes, why now? Why did Google hit this milestone right at this particular moment? Because it wasn't just a slow, steady climb, right? There were some specific things that pushed them over the edge.
Absolutely. You're right. There were definite catalysts. And probably one of the biggest propelling forces was a pretty significant recent antitrust victory. There was a ruling earlier this month from federal district court judge Amit Mehta, and it was pivotal.
The Chrome case.
Exactly. That decision saved Google from potentially having to sell off its Chrome browser. And many people saw that as like the worst case scenario in these ongoing antitrust fights. The government was arguing that Google illegally kept its search monopoly using deals involving Android and Chrome, basically boxing out competitors,
Right.
losing Chrome. That would have been a massive blow. It's such a key gateway to all their services, collects so much data. It would have been a huge structural hit.
Yeah, I remember all the talk around that trial. The idea of Google having to actually sell Chrome seemed almost unimaginable, like a real existential threat to parts of their whole system.
Yeah.
So what was the real-world impact of winning that
Huh.
from, say, an analyst's viewpoint?
Well, city analyst Ronald Jose, he specifically pointed this out. He said the ruling, and I'm quoting here, provides more clear operational guidelines for Google.
Okay, clear guidelines.
And that legal clarity, it's incredibly important. Just think about it trying to plan years, even decades ahead, innovate when a core product like Chrome might get ripped away. That creates massive strategic uncertainty.
Yeah, absolutely.
So this ruling cuts down that uncertainty dramatically. It lets Google operate with more focus, put resources where they want them, chase those long-term plans without this immediate threat of being broken up hanging over them.
Makes sense.
And that naturally gives investors a big confidence boost. It's not just legal clarity. It's almost like a strategic green light for this fight, at least. It validates, to some extent, their interconnected ecosystem and just removes that immediate breakup fear.
Yeah, that makes perfect sense. Less strategic fog equals more confidence equals higher value.
Yeah.
Okay, so that's one huge factor. But you can't talk about big tech valuations right now without talking about the elephant in the room. AI. How much is AI momentum driving this for Google? What are they actually doing there?
Oh, AI is absolutely central to their momentum now and their future story. Google isn't just a player. They are arguably one of the absolute key players in this global AI race, primarily through their Gemini models and their chatbot work.
Gemini, right?
Yeah, for anyone listening who isn't familiar, Gemini is basically their suite of advanced large language models, LLMs. These are the sophisticated AI programs that can understand and generate text like humans. And they're multimodal too, meaning they handle text, images, audio, video. These models are really cutting edge, and they're powering stuff across Google's whole universe. Better search results, smarter productivity tools, totally new AI apps. They're vital for Google staying competitive.
And it's not just about the flashy public chatbots, is it?
Yeah.
It's also how they're weaving this AI into their existing businesses, the really profitable ones, especially for big companies.
Precisely. That's a critical piece. Google, just like Microsoft with Azure AI or Amazon with AWS AI, is strategically embedding these advanced AI tools right into Google Cloud. And this is a huge deal for enterprise customers. If you're a business just starting with AI or maybe looking to upgrade your cloud services, Google's integrated AI stuff becomes a really powerful, very compelling choice. We're talking about things like Vertex AI. That's their platform for building and deploying machine learning models. It means businesses can tap into Google's deep AI expertise, their massive computing power, their pre-trained models. It makes it way easier and faster for companies to actually use these transformative technologies without having to build it all themselves from scratch.
Right.
And that demand from businesses for scalable, reliable AI solutions, that's a massive and growing driver for Google Cloud's revenue. And yeah, it definitely feeds into the overall valuation.
Okay, so if you put together that legal clarity from the antitrust win, plus this massive AI surge and integration, what does that mean for how fast Google can actually move now, how quickly they can expand?
Yeah, and that brings us back to Ronald Jose, the city analyst. His analysis is really sharp here.
Yeah.
He noted that the pace of Google's product velocity is ramping, aided in part by Judge Mehta's ruling.
Product velocity. What does that really mean in practice for a giant like Google?
Right. So product velocity isn't just about coming up with new ideas. It's the speed and efficiency, how quickly they can develop, test, and roll out new features, new products, updates to literally millions or even billions of users.
Yeah.
So with that legal cloud around Chrome sort of lifted, there's likely less hesitation, maybe fewer internal resources tied up worrying about it, just a clearer path forward. That lets Google potentially speed up R&D, get innovations out the door faster, and that kind of agility, that's a huge advantage when AI is moving as quickly as it is.
And that faster speed
Yep.
links directly to how their AI, like Gemini, can then spread across their whole user base, right? Making everything better.
Exactly. Josie hit that nail on the head, too. He pointed out that Gemini's tools, capabilities, integration, and adoption continues to expand across Google's product halo.
Product halo. Explain that a bit.
Yeah, that product halo concept is absolutely key to understanding Google's whole strategy. It basically means when they improve one core service with AI, let's say search gets smarter or Gmail gets better assistance, it doesn't just stay there. It creates this ripple effect, this synergy. It makes other Google products stronger too. Maps, Android, Google Workspace, YouTube.
Ah, okay.
Imagine AI and search instantly linking to your travel plans and calendar, or giving you smart suggestions right inside your email based on context. It makes the whole Google experience richer, more joined up, and honestly harder to leave. It reinforces user loyalty and drives adoption of everything.
That sounds like a really powerful network effect, is leveraging those existing users they already have.
Which they have in absolutely massive numbers. And that's their inherent, almost unbeatable advantage, just the sheer size and scale. Google has this platform for rolling out AI, collecting data, getting user feedback that's just unparalleled. They boast, 15 products with 500 million monthly active users.
15. Half a billion users each.
Yeah, it's staggering. That gives them this enormous built-in audience to launch AI features, gather unimaginable amounts of real-world data to train their models better, get feedback, and just iterate super fast. It creates this incredibly strong competitive moat, that sustainable advantage. It's just so hard, maybe impossible, for smaller players to copy that. Not just because of the money needed, but building those network effects, those user habits, that takes decades.
Wow.
This isn't just scale. It's like a foundational advantage that actually gets stronger the bigger they get and the more AI they integrate.
Okay, so we've covered the massive $3 trillion number, the elite club Google's now in, and these key forces, the antitrust win, giving clarity, and this huge AI surge. Now, with that giant valuation kind of cemented and a clearer view of what pushed them there, it does raise a bigger question. What does this concentration of power, this whole age of megatech, actually mean for the wider global economy?
That's a really excellent question. And it's something everyone watching the global economy, especially investors, should probably be thinking about. The fact that we have multiple companies worth $3, even $4 trillion, and they're mostly tech companies, it signals a massive ongoing shift.
Yeah.
It suggests that the main engines of wealth creation, economic growth, even social influence, they're increasingly centered around digital stuff, infrastructure, software, AI, fancy electronics.
Right.
And this concentration, it raises some tough questions, like about innovation. Can these huge companies stay nimble? Can they keep disrupting things like startups do? Or do they just become slow giants? It definitely impacts competition. It makes it way harder for smaller companies to challenge these behemoths who have basically unlimited resources, data, and reach.
The barrier to entry gets higher.
Much higher. And their sheer size means their decisions, their investments, even just their stock price movements can sway whole markets, whole sectors, even national economies. We're really seeing a kind of redistribution of economic power where just a few dominant tech platforms are becoming the gatekeepers for commerce and information.
And while they're all in this super elite club together, their actual businesses, their core strengths are pretty different, even when they compete, right? It's like different sides of the same giant diamond. How do they stack up against each other? Where do they overlap or differ?
That's a really important distinction to make. Let's quickly compare the peers in this $3 trillion plus club. Google, as we've been saying, built on search, online ads, and now really pushing AI, cloud with Google Cloud, and the whole Android system. Their strength is in these everywhere digital services and information.
Got it.
Apple. Totally different focus, really. Famous for hardware, the iPhone, AirPods, watch, plus that booming, very profitable services business that locks people into their premium world. Their advantage is design, brand love, that tight integration.
Right, the walled garden, but very popular.
Right, exactly. Then Microsoft. Deep roots in enterprise software Office, Windows, but their huge growth engine now is cloud computing with Azure. And they've also gone big on AI, integrating Copilot features everywhere.
Yeah, Copilot's popping up all over.
And finally, Nvidia, the newest, fastest grower, rocketed up because of their AI chips and the data center gear needed for AI. Nvidia is basically selling the essential tools, the picks and shovels, for this AI gold rush. They supply many of the other giants.
Interesting. So they're like a supplier to the others in some ways.
In many ways, yes. So while they all touch on AI and cloud, their main businesses are pretty distinct. They definitely compete fiercely, like in cloud services or AI development. Google and Microsoft are constantly battling for cloud customers, but they also kind of rely on each other sometimes, like maybe using NVIDIA's chips for their AI models. It's this really complex web of competition and sometimes codependence.
That paints a really clear picture of just how powerful these companies are, but also how different their foundations can be. But okay, even with this huge valuation and that recent good news on the Chrome front, Google isn't totally free and clear, are they? There are still some persistent regulatory clouds hanging around that investors probably need to keep in mind.
That is a very, very important point for you listening to remember. Google is definitely not out of the regulatory woods, not by a long shot. For example, the company is still dealing with that massive ongoing antitrust lawsuit focused on its online advertising business.
Right, the ad tech stack.
Exactly, and this isn't some minor issue. Online advertising is Google's core business, its main moneymaker. So it's under intense scrutiny from regulators everywhere. The concerns are about market dominance, claims that they favor their own ad tools, potential anti-competitive stuff that might hurt publishers or advertisers. Regulators are basically asking, does Google's control over so many pieces of the ad, puzzle, the exchange, the tools everyone uses, give it an unfair edge? Does it lead to higher ad prices or lower publisher payouts? The potential outcomes, they could range from forcing changes in how they operate to big fines, maybe even, though less likely, being forced to sell parts of their ad business. Any of that could really hit their revenues.
And it's not just that one big lawsuit, right? There's wider scrutiny, too.
Correct. We also know the Federal Trade Commission, the FTC, is actively looking into both Google's and Amazon's advertising practices.
So it's broader than just Google.
Yeah, it shows a wider government concern about market power in digital ads generally. So these ongoing fights, even after the Chrome win, they create this layer of uncertainty, potential headwinds. They cost a lot in legal fees, distract management, and could potentially force structural changes down the road. Winning one battle, like Chrome, doesn't mean the war is over. It just closes one chapter while others are still very much open.
So it's interesting. On one side, Google's AI is this massive growth engine. But on the other, AI is also spawning new competitors attacking its most vital territory, search. What's happening there? Is that a real challenge to Google's long dominance?
This raises a really fundamental question about, the long-term durability of Google's search kingdom. We are seeing more intense competition in search, specifically from AI-focused newcomers. Companies like OpenAI, with ChatGPT, Anthropic, Perplexity AI, these are popping up.
Perplexity, right. I've heard about this.
Yeah, and they're trying to shake things up. They offer different kinds of search experiences, often driven by AI, promising more direct conversational answers or synthesized summaries instead of just that traditional list of blue links. Perplexity AI, for example, tries to give you direct answers with citations, like an AI research assistant. That's quite different from Google's usual model. And that kind of shift could potentially grab users who want faster, more integrated info.
And didn't Apple say something interesting about this during the Google trial? Some testimony.
Yes, exactly. During that big antitrust trial, Apple's senior VP of services, Eddie Q, he actually testified that Apple saw searches in its Safari browser decline for the first time back in April.
Decline. Wow, that's notable.
It is. Now, it's just one data point, but it suggests there might be a shift happening in user behavior, maybe market share. It could be a hint, like a canary in the coal mine, that people are trying out alternative ways to find information, maybe including these new AI tools, even if it's still within Apple Safari. It just highlights that even the biggest players aren't totally immune to shifts caused by new tech.
But Google pushed back on that claim, didn't they? They weren't just letting that sit there.
No, they definitely pushed back. Google basically said, well, the company is seeing growth in other areas, which suggests that, okay, maybe there are shifts in specific places or platforms, but their overall search world is still strong, or they're making up for it elsewhere. It just shows how dynamic and contested search is right now. It's a real battleground. The incumbents are fighting hard to keep their lead, while these new AI-powered players are trying to offer something fundamentally different. And Google's not standing still, obviously. They're integrating AI heavily into their own search to try and evolve with and ideally lead this new wave.
Okay, so beyond the core stuff, ads, search, cloud, AI, Google's also famous for its moonshots, right? Those big long-term bets. One of those is Waymo in the self-driving space. How does that fit into the overall valuation story?
Yeah, Waymo is definitely a key part of that longer-term picture. It remains a really significant player in this still emerging robo-taxi market. They're running fully driverless services now in places like Phoenix, San Francisco, LA.
Right, I've seen the videos.
And this shows Google's serious investment in these future-shaping technologies that go way beyond just ads. Waymo is a big bet on the future of how we get around, a potentially enormous market down the line. Now, they've got tough competition there, Amazon Zoox, Tesla with its full self-driving ambitions, other AV players too.
But these ventures, even if they aren't making huge profits right now, they signal to investors that Google isn't just milking its current cash cows. It's actively trying to build the next generation of tech giants. It shows diversification, long-term vision, and that definitely contributes to the overall potential priced into that big valuation. Okay, so we've really walked through Google's incredible climb, the forces behind it, the competitive landscape, the risks. It's a lot. But for you, the individual investor, maybe looking at Alphabet stock, standing there looking up at this $3 trillion giant, the big question still hangs there. Where do you go from here? I mean, is Google still a buy at $3 trillion? It's reached such a, well, stratospheric valuation.
Yeah, this is exactly where investors need to put on their critical thinking hats. The fundamental thing to grasp, I think, is that at this kind of valuation, Google isn't just priced for doing well, it's priced for like continued dominance against everything. When a stock's market cap is this high, it just inherently means the market expects truly massive things for its future growth.
Right. The bar is set incredibly high.
Incredibly high. Investors aren't just buying into the profits it makes now, which are impressive. They're betting on continued almost exponential expansion, relentless innovation, keeping that market dominance for years, maybe decades. So figuring out value at these levels, it's not about finding a cheap stock in the old sense. It's about weighing those really ambitious growth hopes against the current price and also against the, frankly, magnified risks that come with being this big and this highly valued. I mean, we're talking about a company that has to keep out-innovating, out-executing, outperforming just to justify where it is now.
It really does sound like a delicate balancing act, doesn't it? On one side, you've got that positive momentum, that ramping product velocity, the expanding Gemini product halo we talked about. Yeah. That sounds great, a strong bull case. But then on the other side, you've got these growing competitive threats, the AI upstarts in search, plus those nagging regulatory headwinds. How do you even start to weigh those for a company this huge?
Exactly that, balancing significant potential against real and maybe growing challenges. The momentum from AI, the clear path after the Chrome ruling, that immense ecosystem, all that suggests Google has powerful tailwinds to keep leading and innovating. That's your strong bull case for more growth.
Okay.
However, the rise of serious AI for search rivals like OpenAI, Anthropic, Perplexity, plus those hints like the Apple Safari data, they raise legitimate questions about whether Google's search dominance is truly safe forever. It's not guaranteed their lead is unshakable. And if search market share started to seriously erode, that would be a massive issue, given how central it is to Google's whole business. And similarly, yeah, the Chrome case is done, but the ad tech lawsuit, the FTC probes that regulatory pressure is constant. It adds ongoing uncertainty. It could mean costs or changes down the line impacting sentiment, maybe future earnings. So as an investor, you have to ask yourself, how much of that risk is already baked into the $3 trillion price? And how much risk is maybe still underestimated by the market?
So for investors thinking about Alphabet right now, maybe you already own it, maybe you're considering jumping in. What are some potential ways to approach this? What strategies or key things should you be thinking about in this kind of high-stakes situation?
Well, for long-term investors who are already holding Alphabet shares, the case for just continuing to hold probably centers on those undeniable strengths. The dominant market positions, that huge, sticky ecosystem, the continued big investments in AI leadership. If you believe Google's AI strategy and long-term bets like Waymo will keep driving major growth, then holding might feel right. You're trusting management to navigate the bumps.
All right, stick with the winner.
Pretty much.
Right.
But for others, maybe that incredibly high valuation, combined with those risks we just talked about, competition, regulation, maybe that makes them think about trimming their position.
Taking some profits.
Exactly. It could be a sensible move to take some gains off the table, especially if Alphabet has grown to be a really oversized part of your portfolio. Or just to diversify a bit more.
Okay. And for new investors?
For new investors considering buying in now, the question is really about the entry point and what growth you realistically expect from here. You're buying into a company that needs to grow substantially from an already enormous base. So it really requires a strong conviction that they can keep innovating powerfully and defend that incredible moat against all comers.
And thinking through all these points, what really strikes me is that even at this massive scale, the future isn't set in stone. Which means for you, listening, doing your own homework, your own research journey, is absolutely critical.
Precisely. Couldn't agree more. We really encourage you to take everything we've discussed today and do your own deep dive into Alphabet. Ask yourself the tough questions. Where is the next big wave of revenue going to come from for a $3 trillion company? How will they really defend their turf against these new AI challengers, especially in search? What do these regulatory shifts really mean for their profits long term? And how will those big bets like Waymo actually play out over time? Getting a handle on those nuances, keeping an eye on key things like Google Cloud's growth, AI adoption rates, any new legal twists, that's how you make informed decisions for yourself.
And there you have it, an alphabet empire, as some might call it, now worth an incredible $3 trillion. It's truly amazing to see these companies hit these kinds of numbers, reshaping our world as they go. But it leaves you with a big thought, doesn't it? As these tech titans just keep getting bigger, how will that delicate balance between breakneck innovation, undeniable market power, and necessary government oversight actually evolve? And maybe more importantly, what does that mean for your future investments? That's definitely a question that's going to shape our financial world for years to come.
A very, very thought-provoking question to end on. It really underlines that even at this size, the story is definitely not finished.
So next time on The Deep Dive, we're jumping into another really fascinating, really complex story that's been all over the headlines, the whole TikTok saga. We'll try to unpack the latest framework for a deal between the U.S. and China, President Trump's kind of cryptic comments on Truth Social about it, and that unexpected stock jump for Oracle that seemed tied in. You won't want to miss that collision of geopolitics and social media.
Ooh, that does promise to be a really interesting discussion. So many layers, so many different interests involved there.
Absolutely. And as always, please remember, this discussion is purely for educational purposes. It is not financial advice. Always, always do your own research before making any investment decisions.